Welcome to this insightful video on the growth of our economy. I'm Nate Krampe, and in my 13 years in the industry, I can honestly say that there are some amazing things that are happening today versus even just a couple years ago. Now, some of you may have heard my analogy regarding the economy as a fast-running tortoise, but it's not the sickly hare that the media has made it out to be. Now, continuing with that analogy, I was listening to Dr. David Kelly, Chief Strategist at JP Morgan, and recently he had some very insightful comments regarding our economy. Now, in keeping with the running a race analogy that he has been talking about before, here's what he had to say. Not a lot happens in the 2 hours until a person finishes and crosses the finish line. Now, however, well before that point, the race is usually decided between a contest between one of the fastest runners and the pack. Now, staying with the pack has some key advantages for distance runners. If you tuck in behind the pack and behind a few big runners, you can reduce your wind resistance, and in addition, it's easier to pace yourself. But you just keep time with those around you. Now, however, jogging along monotonously with a pack sometimes can be too boring for runners, and he or she is going to try to break away. And as the lead grows, the question then comes, is the runner going to be able to hold on to the lead, or is the strain of running in the front going to be proving to be too much, which allows the pack to reel in the runner? Now, let's fast forward. The global economy marathon is running right now, and the U.S. has broken away from the pack. In the first half of the 2018, economic growth in the first quarter was 2.2% annualized, which was above the 1.5% achieved in the Eurozone and the negative 0.1% seen in Japan. Now, while in Europe and Japan, their GDP should rebound in the second quarter, the U.S. still could surge even more to over 4% annualized and maintain a sizable U.S. lead. In financial markets, the S&P 500 has risen nicely. Now, we contrast that with a small decline in the European and emerging market indices. Last year, international economic growth accelerated, the US dollar fell, and the international equity indices generally beat the US counterparts. However, this year, the US runner has broken away from the pack, and the question is, can the US maintain its lead? Now, in the economic growth as in a marathon, maintaining a lead is harder than establishing one, and most likely the pack will catch the US sometime in 2019, if not before. One reason is simply that the U.S. fiscal stimulus will fade, and the best case for tax cuts, or put another way, the worst for U.S. Treasury tax receipts, and we will be happening in the second quarter of 2019. Beyond that point, barring further tax cuts or spending increases, the federal government will tend to be less supportive of growth. A second reason is that U.S. monetary policy is gradually getting tighter, and in this environment, the Fed is likely to raise rates. The economy will likely continue to keep growing. However, the U.S. may fall back to the rest of the pack, and it would be all the more important for you as an investor to make sure that you're invested into many different areas and are diversified. Please feel free to reach out to us if you have any questions and would like to talk more about specifically your situation. Take care. Have a great day.